As Russia surrounds Kyiv, markets under pressure yesterday. The Fed due to have testimony today. That's all up on 3 Minutes in Markets and Money. Yesterday, markets sold off under continued pressure from the Russia invasion, and markets had rallied here over the last 3 days, but really have not made a lot of progress here. But the sell-off yesterday really not surprising after 3 days of rally, and again, retesting support. Now this morning, markets are set to rally again, looking to come out of the gate this morning a little bit stronger. Again, this market's continuing to try to consolidate above these January, October lows. So that's actually good news. Market remains very negative in terms of sentiment. The CNN fear greed gauge is now very negative in terms of the fear side of that equation. That's all supportive, at least for a short-term bull market rally. Now what we need though is some good news. Some good news could come from the Federal Reserve today as Jerome Powell starts his two-day testimony before Congress, talking about inflation, Fed policy, these type of things. Now that meeting is coming up on March 15th. We may get some clues today if Jerome Powell starts talking about concerns about geopolitical risk on the economy. That may lead to this idea that he could be coming in a bit softer or a bit more dovish in terms of interest rate hikes, at least at the March meeting. Any type of transition by the Federal Reserve in today's testimony could actually give the markets a boost here. So as we continue to watch what's going on with markets here, it just remains critically important to hold these lows here back from January. As long as the market can do that, there's not a whole lot of downside risk here at the moment. But a break below that level is going to set up for a retest of those lows that we just saw recently, and that also sets up potentially a lower decline. So any type of news that is more hawkish from the Fed could send stocks lower today. This is a bit of a cautionary area to be in the markets right now, but this is also why bonds have continued to perform very well as of late. With the rise of geopolitical risk in Russia, rising oil prices, which is inflationary in nature, slower economic growth, with the Atlanta Fed now coming out their first quarter estimate for GDP now at 0% growth. Bond prices have been performing much better lately in this risk-off environment. Bond prices rising up to the 50-day moving average here. That's actually a positive sign, but they are getting back to very overbought levels. So a bit of consolidation in this area would not be surprising, but a break above this 50-day moving average could certainly set up lower bond yields, higher bond prices over the course of the next couple of weeks. Again, as we take a look at what the Fed's saying, the Fed could certainly make some announcements today that would drive yields lower again if they're becoming more dovish on their stance. I know that sounds a little bit backwards, but as they get more dovish at this point, that's concerns that economic weakness is actually much more exacerbated than currently believed. That will lead to lower yields. And lastly, for all you cryptocurrency fans, Bitcoin also triggering a buy signal here just recently. A nice strong rally in Bitcoin futures as well as Bitcoin itself, driving that price up again as we take a look at this risk-off type scenario, risk-on scenario in markets. Bitcoin has traded much more closely with what's happening in the indexes itself. Again, with markets rising this morning, we should continue to see some participation in Bitcoin. Bitcoin looks to be a little bit weaker this morning right out of the gate, but that's not surprising after such a big rally here. See that pull back a bit. As long as they can maintain above this 50 and 20-day moving average, which now provides a very good level of support for Bitcoin in the short term, we could see cryptocurrencies rally a bit more from here as we get further into the month. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.